Welcome to the Deep Dive. We're the show that takes a whole stack of information and, well, gets right to the good stuff. Today, we are diving into Duolingo, the language learning app. Lots of us use it. We're looking at the app, the company, and what the financial world's making of its stock. That's ticker DUOL. We've pulled together quite a mix of sources for you. We've got stock analysis from sites like FinViz, TradingView, Simply, Walsane, even detailed financials from macro trends. Our goal here, to really unpack Duolingo's recent performance, the market mood around it, and what might be next. We want to help you cut through all that noise and hopefully get you well-informed, fast. It's actually a pretty fascinating company, isn't it?
Oh, absolutely. It's kind of remarkable. You've got this company known everywhere for its little green owl mascot, trying to, well, change education, really.
Mhm.
And at the same time, it's navigating the pretty complex world of the stock market. We'll dig into its financial health, what analysts are saying, and yeah, some pretty interesting insider moves too.
Okay, sounds good. Let's unpack this then. Right, before we get lost in the market stuff, maybe just a quick refresher. For anyone who maybe doesn't use it, what exactly is Duolingo? What's the business behind the bird?
Sure. So Duolingo, it was founded back in 2011 in Pittsburgh, actually, by Louis von Ahn and Severin Hacker. It's mainly known as a mobile learning platform. The big thing, of course, is the free language app. Teaches, 40 different languages now? Spanish, French, Japanese, all the popular ones. But they do have other things. There's Duolingo for Schools, which is more structured, web-based. And they also have the English test, an online proficiency test that's gaining quite a bit of ground.
Okay, so they built out this platform, got a huge user base. When did they actually step into the public market? And, how big are they in that space now?
Right. So the IPO, their initial public offering, was July 28th, 2021. They trade on the NASDQ, tickers DUOL, like you said. Sector-wise, they're in technology services, specifically software application. And right now, their market cap, that's the total value of all their shares, is sitting around $15.41 billion.
15 million, okay. So definitely not a small player.
No, not at all. Puts them squarely in, large cap territory.
All right, let's talk performance then, because Duolingo seems like a bit of a puzzle right now. You mentioned incredible long-term growth, but I'm also seeing some pretty sharp recent drops. What's going on there?
Yeah, you're right. It's definitely a mix. As of August 1st, 2025, the last closing price was $338.99. But like you said, we've seen some bumps recently, down about 2.18% in the last day, down 6.89% over the last week, and yeah, minus 14.61% over the past month. The whole quarter is actually down over 15%.
Wow, okay, that's quite the slide for anyone who bought in recently. But what about people who've held on longer? What's the bigger picture look like?
Well, that's where it gets interesting. If you zoom out, the long-term story is, frankly, pretty incredible. Over the past year, the stock's up 101.55%.
Double.
Yeah. And over the last 3 years, it surged 247.43%. Since the IPO back in mid-2021, it's up 143.86%.
Okay, so huge returns for early or long-term investors.
Absolutely. And just for context, its all-time high was $544.93 back in May 2025. The low was way back in May 2022 at $60.50, so it's climbed a long way from that low point.
Right, and earnings season is always a big focus. Do we know when their next report is due?
We do. They're set to release their Q2 earnings on Wednesday, August 6th, 2025. That'll be after the market closes.
Okay, so that'll be a key date to watch, definitely.
For sure. It might give us some clues about, this disconnect between the recent dip and the strong long-term trend.
So moving beyond just the stock price swings,
Yeah.
What about the actual business underneath? The fundamentals, are they actually making money, growing?
Yeah, that's the crucial question, isn't it? And the answer is, well, yes, they've shown really strong revenue growth. Looking annually, revenue was up over 40% in 2024, reaching $748 million. It was up about 44% in 2023 and 47% in 2022.
Okay, so that top line is definitely heading in the right direction. Consistently strong growth.
Very consistent. And even more recently, for the quarter ending March 31st, 2025, revenue hit $231 million. That's almost a 38% increase year over year. Over the last 12 months, ending that same date, total revenue was $811 million, up over 39% year over year.
All right, so they're bringing in the money. Are they keeping any of it? Are they profitable? That's often the tricky part for tech growth companies.
They are, yes. Their net income for those 12 months ending March 31st was $96.75 million. That gives them a net profit margin of just under 12%, is pretty solid. And their gross margin, basically how much they make from sales before operating costs, is really healthy at over 71%.
71% gross margin. Wow.
hmm
And you mentioned earnings per share, EPS. How did they do last quarter?
Yes. So in the last reported quarter, their EPS came in at 72 cents.
Okay.
And the estimate, what analysts were expecting, was only their $1.51. They beat that estimate by almost 40%.
40% beat. Okay, that's a big surprise. That's definitely an aha moment.
Yeah.
What drove that, and what are expectations going forward?
It suggests, really efficient operations, maybe stronger monetization from users than expected. And looking ahead, analysts are forecasting that EPS will grow quite a bit next year, potentially up to $4.42. That'd be another 48% increase. So the expectation is definitely for continued profit growth.
Okay, impressive growth, impressive profitability. But are they funding this by taking on tons of debt? What does the balance sheet look like?
That's another strong point, actually. Their financial health looks, well, pretty robust. They have a very, very low debt-to-equity ratio. It's just 0.06.
0.06.
Yeah, which basically means they rely very little on borrowed money compared to shareholder investments. It signals really low financial risk, strong balance sheet management.
Right. Minimal debt.
Minimal debt.
Yeah.
And their total assets have been growing steadily, too. Reached $1.4 billion as of March 31st, 2025. That's up over 31% year over year.
So strong growth, profitable, minimal debt. It does make those recent stock drops seem a bit puzzling, doesn't it?
It does. It suggests the market might be reacting to something else. Maybe expectations, maybe sentiment.
Okay, well, let's talk about that sentiment then. The fundamentals seem solid, on paper at least, but what are the Wall Street analysts saying, especially with the stock's recent behavior, and what about insider activity?
Right, so the overall analyst consensus price target is actually quite a bit higher than the current price. It's around $491.97. The range is pretty wide, though. Low estimate is $375, high is $600. And you have sites like Simply Walcent suggesting it might be undervalued right now, maybe by around 31% compared to their fair value estimate.
So generally bullish then, despite the recent pullback. What are they pointing to?
Yeah, many are still bullish. They often talk about Duolingo moving into new subjects, not just languages, and expanding globally. They see the driving more users, more engagement, and importantly, more monetization. They also highlight AI, generative AI specifically, how it can make things more efficient, improve the user experience, help them expand faster, and ultimately boost subscriptions and profits.
Okay, that makes sense. But there's always another side to the story, right? What are the more cautious analysts worried about?
Exactly. And there are definitely cautious voices. A big concern that comes up is slowing user growth. You saw JMP Securities cut their price target recently from $475 down to $450, and they specifically mentioned that potential slowdown. That news alone knocked the stock down over 6% that day.
Ah, okay. So worries about growth hitting a ceiling, maybe.
Potentially, or just moderating. There are also concerns about AI costs. We talked about the benefits. But implementing AI effectively can be expensive, and some worry that could actually squeeze their profit margins. And then there's competition. As they move into new subjects, they're running into established players. It's not just language learning anymore.
Right. Okay, that brings us to insider activity. You mentioned that earlier. What's happening there? Because that often gives a different kind of signal.
It does. And this is, I think, a really key point for anyone looking at Duolingo right now. There's been significant insider selling over the past 3 months.
Significant how? Like who's selling?
Well, multiple key executives. The co-founder, Severin Hacker, he made several sales in June and July. One proposed sale in June was for 70,000 shares, worth over $33 million.
Wow.
Yeah. The CEO, Luis von Ahn, also sold shares in April, March, February. And you see sales from the CFO, Matthew Skarupa, the Chief Engineering Officer, Natalie Glantz, Chief Business Officer, Robert Meese, the General Counsel, Stephen Chen. Multiple sales from all of them during this period.
Okay, that's a lot of selling from the top brass, including the founders. How do investors typically read that?
It's often seen as a bit of a red flag, or at least something to watch closely. Now, insiders sell for many reasons: diversification, personal finances. But when you see this volume across multiple key people, some investors interpret it as maybe insiders thinking the stock price is, well, fully valued, or perhaps even a bit high right now. It can suggest a potential lack of strong conviction in, say, the immediate future upside.
Even with the strong fundamentals we talked about.
Even then, it adds to that puzzle. Institutions own a large chunk, about 79%, but insiders still hold over 17%, so their selling is noticeable.
Okay, let's talk more about AI. It's clearly a huge factor for basically every tech company now. How is Duolingo navigating this? You mentioned potential benefits, but also cost pressures.
Right. It's definitely a hot topic for them. The CEO, Luz Fanon, actually made some waves back in June predicting AI could replace most human teachers.
Oh, I remember that. Caused a bit of a stir.
It did. And then later, I think it was May, he seemed to walk back some of those AI first comments. He mentioned human backlash and clarified that no, AI isn't meant to replace their employees.
Okay, so a bit of a tricky message to manage there. But
Yeah.
focusing on the business side, you mentioned AI cost pressures. Can you unpack that? Where do those costs come from?
Sure. While AI offers huge potential like boosting content creation, personalizing learning, expanding into new subjects faster, implementing it effectively isn't cheap. You need massive amounts of data. You need highly specialized AI engineers and researchers, which are expensive and in high demand. You need significant computing power, infrastructure. It all adds up. And beyond their internal costs, there's this broader OpenAI disruption risk people mention. The whole landscape is changing so fast with powerful new AI models. Could a competitor leverage AI even better? It's a real question.
So it's double-edged sword then. Massive opportunity, but also potentially significant costs and new competitive threats.
Precisely. It's probably the key strategic challenge and opportunity for them right now. How to leverage AI effectively without letting the costs erode those nice margins we saw and while staying ahead of competitors using the same tech.
Okay, so pulling this all together, for you, the listener, trying to make sense of Duolingo, what are the main takeaways? What should people keep in mind?
Well, first, you have this clear contrast. Impressive growth in revenue, solid earnings, very little debt. The fundamentals look strong on paper. But then you have the recent stock performance. Those drops we saw nearly 7% last week, over 15% last month. It shows that fundamentals aren't the whole story. Market sentiment matters.
And there are those valuation concerns you mentioned.
Exactly. Despite the drop, you still see headlines asking if it's overvalued, if market expectations are too high. That debate is definitely out there.
And competition is a real factor too, you said, not just in language anymore.
Absolutely. As they broaden their scope, they face more competitors. And you even get these kind of curveball worries like that comment about Meta's Ray-Bans potentially impacting them. It just shows how new tech, even seemingly unrelated tech, could shift the landscape.
Right. And volatility. Is it a bumpy ride for investors?
It can be. While some sources might call its weekly volatility stable, others point to its beta. One source gave it as 1.65.
And beta means?
Beta measures how much a stock tends to move compared to the overall market. A beta over 1 means it's generally more volatile. So 1.65 suggests Duolingo tends to be about 65% more volatile than the market average. If the market moves 1%, Duolingo might move 1.65% up or down.
Okay, so potentially bigger swings. Good to know.
Yeah, something investors need to be comfortable with.
All right. This deep dive into Duolingo certainly surfaced a lot of interesting tensions. On one side, you've got this company firing on a lot of cylinders financially. Strong growth, making profits, low debt, and clear potential ahead, especially with AI.
Definitely. But on the other side, you absolutely cannot ignore the recent stock pullback, that pretty significant pattern of insider selling, and these cautionary notes from some analysts about growth, costs, and competition. It really is a dynamic situation. Innovation versus market perception versus financial reality.
So as you think about Duolingo, here's maybe a final thought to chew on. Duolingo built its success on this really unique, gamified, engaging approach to learning. That's been their magic, right? How do they balance that core strength, that user loyalty driver, with this rapidly changing world of AI-driven education? Especially when AI could potentially make learning much more efficient, but maybe less Duolingo-like. And how does their leadership navigate the public conversation about AI replacing teachers while also integrating it deeply into their product? It's not just about Duolingo's future, it kind of touches on the future of learning itself, something to think about.